Hey guys, welcome back to the channel. This is your weekly outlook. Thanks for tuning in. I really appreciate you guys watching. So today we're going to talk about the performance, what's driving the performance so far, what I learned this week, I guess, through all the charts and all the companies that we will cover, some of the stocks that I looked at, which look really interesting. We'll talk about Amazon specifically because I think Amazon is setting up for a really nice move this year. I almost feel like it's like the Google from last year, right? And the Meta from like a few years back. So we'll talk about, how what the catalyst is, and it's not the robots in the warehouse. It's a completely different catalyst that is right in front of us, but no one is really talking about it. And we'll talk about it and try to like lay it out in simple terms. And what are other beneficiaries, second order beneficiaries from Amazon's success that I'm going to talk about with you today. So yeah, we will cover that. We'll talk about a few other companies that I've looked at this week. So let's just get into it, guys. So the performance this week was driven by GLXY, who got a huge, news this week. They actually received the approval for 850 megawatts, I believe. This is my largest position now. So this is huge so I was reading up on it a little bit, and they were saying that Texas in overall last year only gave approvals for about 1 gigawatt, and GLXY got 800 plus gigawatts just alone. So I think this is huge for them, and the next catalyst for this stock is going to be when the tenant is announced. And I'm sure that the people are calling, right, there's no capacity available, there's no energy available. Energy is only getting hard to get. So Helios is basically, that's their data center, has doubled their capacity overnight due to this approval. So those of you who don't know, basically what happens is they had to get a bunch of permits and everything else to prove to ERCOT, which is the board, the electricity board of Texas, who takes a few months to get them the approvals, or a few years almost at this point. So they finally got approval. 1.6 gigawatts is massive, and it positions GLXY as a leading data center developer in North America. The problem with GLXY has been that they have their tenants that they have right now for the initial one, 800 gigawatts was CoreWeave, and CoreWeave has had a lot of issues recently, right? So this is going to take a lot of that was the reason why the stock was under pressure, because CoreWeave's bonds have been graded junk now. So due to that, there's been a lot of pressure on GLXY as well as the crypto business, right? Because the crypto business is very volatile, so that also doesn't help the company. And I think that's the reason why the company was under pressure. Now, with this new deal, they can probably and the deal economics for the megawatts for data centers have also gotten better. So with this new approval, they can probably get a hyperscaler involved in their Helios facility. And what that does potentially also, in my opinion, is if CoreWeave was to default, if that capacity was to, completely go away overnight, then there's a high chance that the person, whoever is taking over the other half of the Helios data center, just takes over that portion of the data center as well. So this significantly de-risks their cash flows, and potentially it's just there's going to be a high visibility into this revenue going forward. And I think this stock re-rates materially higher from even here. And then we have the catalyst of crypto, right? Because we've talked about how crypto might come back. We'll talk about it more when we talk about the charts here. But next month, I think crypto is going to be probably having its moment again, and with the Clarity Act. So I think that's another catalyst that you have. And then I think they're going to have another 100 megawatts potentially approved here soon. So very likely that this continues higher, right? It's become my largest position this week, and this was the primary reason for performance. And the other reasons for performance have been the thematic plays, as I've said, that I've been involved in. I think I was very lucky with picking up the thematic baskets. This year, I've talked to a few close friends of mine that my plays were mostly in the defense sector, and defense stocks have done extremely well. And I think the drone segment specifically in the defense sector will continue to do really well. So if there's any pullbacks in the market, I am going to add to those plays. So yeah, that's my that was the reason why I wanted to cover this GLXY stock, and I feel very lucky, very grateful for the performance so far, and I'm not sure if it'll continue. Honestly, again, I don't have anything to sell to you, so don't have any reason to lie. I'm just trying to share whatever I'm coming across. So let's look at the charts here. So first of all, let's look at QQQ. Nothing new here, right? Money flow a little bit going down, but it's I don't see anything from QQQ, to be honest. It just looks sideways, but there's nothing to really be worried about. As I said last time around, the EMAs look great. There's no funny business going on where these start to like entangle amongst each other, that's when you know the distribution has started over for a longer period of time. But yeah, this looks like a beautiful trend. You know, like this trend, these bands actually follow the market follows these bands quite well, right? Like you'd see on the way down as well in 2022, these bands were being respected almost all the way, and then when they were recovered, that's when we had the huge move up. So the bands look good. I don't see there being any issues in the short term, at least for the market here. I know this week might be, as I said, a little volatile, because we've had this huge move, right? And now people are trying, like late longs are going to get punished. So I could see us having a pretty bad week this week. And even if if we close the week at more than 20%, I'd be 20% up, I'd be very happy, honestly. I as I said, like this is ridiculous. I'm not sure if it'll continue. So so that's about QQQ. SPX again, same situation. Don't have anything else to say here. Just we've talked about it last week already. Nothing going on. Nothing too exciting. Nothing that really stops me from getting out or something. Like it just looks okay to me. And I think we have a lot of potential catalysts still to play out. We don't know who the new Fed chairman is, and I think that could help IWM significantly. Like last week, as I had shared with you, we talked about IWM in quite a lot of detail last week, and we talked about how IWM actually looks like the best chart amongst all the indices, and it does look like it's playing out relatively well, where IWM continues to outperform the major indices, and I think that outperformance is most likely going to continue. I would really watch for this level here, the 250 level. So if as I said last time around as well, like I think the psychological level potentially is about 300, close to 300 is where we might top out, and then we go back up again. But when we come down, if we do come down, this would be my level to watch. So just saying this right now, if we do get a breakdown of the markets, which I do expect in my humble opinion in Q2, because the bond market has been very quiet. I was reading some stats about it where they were saying that the bond market has not been as quiet as it has been for a long time. And IWM has had 12 days where it's beaten QQQ, and this is the first time that has happened since 2008. So this is a big catalyst. And some of these, as we talked about this with SLV last week, that some of these trends continue for longer than most people think, and violently as more than people think. So could we have a short-term pullback? Yes, for sure. I think this looks a little extended here in the short term, potentially, but we had this as well happen last year. So this scenario is always there. These are like altcoins for the market almost, right? So you can have like a 30% move. I mean, let's be honest, like that was very early in a bull market, right? So we had that violent move up there. But I don't see this happening, but potentially we could go up to like $300, and then we kind of dumb down to this potential double top right here. This is a very important level. So this would be somewhere I would be potentially looking for longs whenever we do get my scenario where I'm saying that the market might correct in Q2, and then Q3 will probably have a bullish quarter. So that's the lens. Again, that's my lens for this year. I don't know if that'll be exactly, obviously it's hard to predict, right? But we just try to make predictions and try to play based on those predictions. Then we have BTC QQQ, as I said to you last week as well. I don't see much going on here. I did add to my long-term basket, but I don't see anything in the short term here. You need to recover these short-term EMAs before you can make a move higher. And funnily enough, I actually didn't know about the Clarity Act that was coming about here. And it actually doesn't. Nothing came from it. So like the charts, I know initially I was like not someone who used to believe in technical analysis, and that the people are the adage where people say that technical analysis is like astrology for men. I mean, I was the same person. I used to chastise technical analysis and stuff, but like I think one of the reasons why I've done relatively well over the last few years has been because of learning technical analysis, because a lot of people follow it, right? And if a lot of people follow it, it automatically becomes reality. The thing is, like, you can be right directionally over a longer period of time, but with the chart analysis, what happens is you can kind of like pick up like supply and demand zones. So it's just a market which is made up of hundreds and thousands of people who are also making decisions based on prior levels, right? So like the VIAV, where it's like the average price from a specific date so someone is paid. So that means basically if someone is stuck in a stock, right, if they bought it at $100, it went down to $30, the VWAP is now sitting at like $40-50. That means most of the people in the market have paid $40 to $50 in that stock, and a lot of people have the mentality of like, as soon as I break even, I'm going to get out, right? So that level automatically kind of plays out. So there is a reason for technical trades, right? And I personally think that I think everybody should have some sort of an education in technical analysis. Hopefully we'll cover that enough in the videos where you can kind of get some grasp of it. And if you're still skeptical about technical trading, I completely get it, because I was just like that myself as well. I never trusted it, but since adopting it, it's actually played a huge role in me doing well. And yeah, I would highly recommend, if you want to take this seriously, I would suggest to get a little bit into it. So the next stock that I want to talk about, UI. We talked about it last week. This is one of my high conviction stocks, as I told you about it. I wrote an article about it on my Substack. I can share the link in the description. I think this stock is misunderstood. The reason being they don't do any IR events and everything else, right? So people just say this is another networking company. Like, what's so interesting about it? Let me tell you, if you've spent as much time as I have in the Reddit, as well as talking to distributors, talking to their customers, you would see what I'm seeing. So if someone is not like, getting this company, I completely get it. Like I procrastinated on learning about this company for the longest time as well. But the more you learn about the company, the more you learn about how the customers treat this company, the more you'll understand why I am so bullish on the stock, or like over the longer period. Ideally, I would like the stock to re-rate quickly, right? Like it goes up 50-60% in like 6 months. That's ideally what I want. But even if it was to go down 20%, I wouldn't care. The only reason why I would go down so much would be because of the low float, right? Because I said the CEO owns 93%. Like the CEO is aligned. The stock has gone up 30x since it IPO'd, and the guy hasn't sold any stock. So like that's some conviction. That's like the CEO that's with us. So like all in all, basically what the primary crux of this thesis is that the competitors keep on increasing prices. The competitors keep on charging licensing fee, and like if you don't pay the licensing fee, they brick your device. Like there's a lot of issues with this segment as a whole, whereas Unify, they've completely changed this on their head. They give you this like the ability to own your device, and people are open to that, and they have like other ways where they can expand revenue, that being through subscription revenues as well as other things. There's some concerns about people saying the memory cost has gone up so much, so this could also impact them. I don't think so. I think it probably impacts them by maybe 1 or 2% gross margins, and the pricing power that this company has is massive. They literally added a tariff surcharge to all of the products that they sell right after the tariffs happened, and their gross margins went up from 42% to 46%. Like the amount of pricing power this company has, no one is spending the time. I think it's like a very lazy analysis, and I was there as well. So I don't know, like what kind of hardware business has 35% operating margins? Not too many. Net income margins are 28%, which can actually expand by 1 or 2% more. 30% net income margins. How many businesses in the world can you find me with that kind of margins? The operating leverage that this business has is actually ridiculous. Like they don't employ a single sales force. All they have is like their R&D staff. 70% of their staff is involved in R&D. And all of their sales and marketing is done by their customers. So I would highly recommend reading this article. I think you'll probably get a picture of why I'm bullish. But like whatever they sell, whatever they start selling, sells out. Data looks incredibly bullish. I've looked at some credit card data. Looks incredibly bullish. They're getting into a higher TAM products with their cameras and everything else. So I don't see any issues. These are all the products that were sold out during this quarter. So that's another thing that I don't know how else I can explain it. They launch a product, it sells out. They launch a product, it sells out. The only reason why I see them not beating the guide this quarter would be not having enough product. That's the only reason why I see them. The issues on this company are not because of the demand. It's because of the supply. There is just not enough supply for their products. And that is because of just in time. They don't want to hold on to, a product that doesn't sell. So that's their only gripe. But that also is not something that's, a deal breaker for their customers. Because what are you going to do? You're going to go to a competitor, which is like 3x more expensive. And you don't even know if if you're going to own the device that you have. And then there's, they have another mode where they have on-device storage. So like whatever you are doing, you can store your footage, your everything else, like your camera footages and everything else on locally on your device. And that's something that's also very important to a lot of the people in this sector. So I've shared a couple of videos. I would recommend watching those videos. I'd highly recommend reading this article, and you might actually get an idea of like why I'm so bullish on this stock. My bullishness comes from spending time in the Reddit mostly, and like reading comments and things like that, and that also looks very strong. And then the other thing that I was talking about here in this article is the pricing power. So this unified travel router was launched for $80. It was selling for $250 on eBay, and people were still buying it. And this is the Amazon search trends. So like they don't even sell on Amazon, but you see like how in November Amazon trends were kind of going up significantly, and Amazon scalpers are going to charge 30-40% premiums on whatever they sell. So that's another thing which I would say like that has a lot going for them. Google trends going up massively. Credit card data looks really good. Website traffic data looks really good. Expanding into higher TAM products, gross margins increasing. Like they literally it has everything. The only thing is that they don't do any other events. So the investors who could potentially be interested and don't have the opportunity to talk to the company, and then the float is so small that institutions can't really get in. But that gives us massive opportunities as retail investors to get into a stock, which is wildly misunderstood. And like honestly, I have not seen a single person talk about this company. So this is not like an egoistic thing, but I just like it's just it's something that we have an edge on because people don't really know about it. So I hope the story kind of picks up, because that this company is, I think if we do see good earnings, I could see the stock going up 20-30% on earnings because the float is so small, right? So let's hope for the best. And even if it does go down 20% on earnings, I would be very happy to pick up some cheap shares, because I know people are talking about the valuation like it's like 40 times earnings or something. Even if they grow revenue at 15%, their earnings are going to expand like 20-23% because of the operating leverage they have. So you can really grow into earnings like within 2 years. And we haven't even talked about a lot of other initiatives that the company is taking, which I have tried to cover in this article. So I'd highly recommend just checking it out. So let's talk about everybody's favorite company, Amazon. So Amazon, as I said, so basically everybody's talking about how Amazon is going to benefit from bots in their warehouses, and they're talking about how like they can really like send stuff through drones to customers, and that's going to lead to like the retail business doing well and all that stuff. I think that is that is right. Okay, I'm not saying that I'm too smart and that's wrong, but the main thing that I'm concerned about right now is these two things here. So basically, this is a perfect social arb scenario for me, and I think I have built a leverage position in Amazon. I have like a crypto account which I use, and now crypto has stocks, so I just opened a 10x leverage position in Amazon. That is just like fun money for me. So that's why I have a position. That's how I have a position in Amazon, because the options are quite expensive. So this is the best way for me to play this trend. So let's just look into it. Let's just try to explain what they're doing and how Claude and Opus are the primary reason for this company to re-rate. So let's just understand the problem first. So if you're going to make money in the market that's going to outperform the market, you have to basically invest in a thesis or know something that the market doesn't know. Right now, the narrative around Amazon, the reason why the stock is under pressure, first of all, and that's what we're trying to, like, if we can find an edge there, that's where we can make money. Right now, the thesis around Amazon is that AWS is not going to grow, or is not growing compared to its peers. AWS has stagnated. The reason why I think that's a broken thesis is the first quarter we saw this happen, like, was the previous quarter for Amazon, right? And I think the analysts are still waiting to see, like, okay, is this like a one-off? This is going to change very quickly. So with Claude and with Opus, you're seeing a lot of people talk about Claude, talk about Opus, and I know some friends who are developers and everything else, and they're talking about how great Amazon's new models are, and the fact is, I just had Gemini build a graphic for us, so let's just look into this, so it'll be clearer, hopefully. Yeah, this is really nice graphic that I was able to create with Gemini. So let's understand how Claude and Opus work and how this is going to re-accelerate the AWS growth. So basically, a basic LLM, as you would know, like just like ChatGPT, and how Azure revenue kind of went up, or Microsoft revenue went up when they had the deal with OpenAI. They basically sell through a SaaS model, right, where they're just selling the businesses subscription to Copilot, and then they're making money based on compute. So how generally that works, and if you do use Copilot at work like I do, that is basically like a transactional relationship almost. You ask a question, you get an answer, you ask a question, you get an answer, right? So like over here, let's just see where Gemini has created this image. It says basic LLM example chatbot versus an agentic AI. So a standard LLM is an advisor almost, right? So I ask a question, how do I bake a cake? The AI response gives me the recipe. That's done. That's the end of the conversation. That's the end of the transaction. Now let's look at how AI model, an agentic AI model works. Basically, the flow for that conversation is going to be multiple queries in one query. So I want to organize a party. Now Claude and the Opus agent, this is like the agentic, you've probably heard a lot, agentic AI. This is perfect agentic AI. One request leads to continuous chains of calls, high sustained compute, and service usage. So it's going to go through this whole process of looking at things. It's going to try to call out various APIs, various apps, and everything else. And that's going to lead to multiple actions. And what that does is every thought and action triggers billable AWS services, creating a powerful revenue flywheel. So this is where Azure and where OpenAI is going to make $1 for one of their queries, these agentic workflows can make $5. Or this is just an illustrative way of saying it. It's not necessarily $5, but you get the point, right? It's not just one query is going to lead to revenue, which is going to be excess of like a single question that you ask ChatGPT. So this is where the revenue comes from. So you might look at search trends and you say like, oh, the Claude is not doing as well or anything like something like that, but that's actually not the case. Like every query or every user, the ARPU for every user on on Claude or Opus is going to be it's going to be massively higher as compared to the revenue from from OpenAI for Microsoft. So it's like it's platform centric. So each person actually who is using Claude or Opus, right, is going to have multiple custom agents, and multiple custom agents are going to run multiple queries, which actually exponentially adds to the revenue. So the problem with Amazon and the problem with the stock that has been that traditional cloud migration has led to a maturing of growth, and the revenue is flatlining. Whereas with new workloads, the agentic workforce that there's going to be that's going to come in, it's going to lead to more apps, it's going to lead to more usage, so that's going to lead to massive continuous revenue stream. This was there in the numbers here last quarter, where they said that quarter over quarter there was a 150% increase in revenue, and that was driving the AWS growth. Now generally, this is a recommendation when you're looking at so here this AWS is growing at a pace we haven't seen since 2022, re-accelerating to 20.2% YOY. So given how much we've seen this quarter, where we've seen like Claude and other AI models being talked about as much as they have been this quarter, right? This could lead to more incremental growth, and this could also lead to more revenue. So what that also does is when people see, okay, Claude is so good, Opus is so good, that's going to lead to more companies wanting to come onto the Amazon ecosystem. NVIDIA chips are expensive. I think you can get about 30% incremental earnings when you compare if you're using an NVIDIA chip versus a Trainium 2 chip, right? So there's that as well. So businesses are going to want to come to Amazon to gain more revenue, right? And then that made me think, okay, what are the second order beneficiaries from this specific trend that we're talking about? The two beneficiaries that come to mind here, first of all, is Marvell Technology. So I know Marvell has a lot of issues. The market doesn't trust the CEO, I think Matt Murphy, but I think it's just sometimes the obvious trade is the right trade to make, right? So this might not work out just because how bad Matt Murphy has run this company and people just don't like his execution, and he's been lackluster. He's not been able to take advantage And there was also a rumor recently where they were talking about Marvell has lost a client, and he came on Jim Cramer's show and said no, that's not the case. So if they haven't actually lost a client, right, and that that's what it looked like from the conversation. Matt again is not the best CEO, is not the best executive at like selling his story, right? And I mean, I thought I thought he would buy shares on the open market, which he did not. And I had opened a position around $88. And I'm down like 10% on that position right now. But I think once Amazon releases their earnings, Marvell is going to be a second order beneficiary from it, because the chips are made with Marvell, and Matt Murphy said that he hasn't lost any clients, so that means that Amazon is still their client. And with all the traction that Amazon is getting, like I feel like Marvell is automatically going to continue to get this customer, and people would want to buy something that they can get exposure to the AWS once the market finally realizes how this is actually changing everything for AWS as well as Amazon. So I think Marvell is another decent play on this on this market. So this is an image that I had Gemini create for me. So they were talking about massive AI models like Claude and Opus drive demand for compute, require immense processing power and high-speed data transfer for training and inference. The AWS Trainium connection, AWS uses custom Trainium chips for cost-effective high performance. So this would also lead to, if the chips continue to do well, then why wouldn't Amazon want to buy more, right? And I think they're saying that doubling capacity soon here. So so like that is known to the market, obviously, but there's so many concerns around Marvell losing customers, and if they have actually not lost the customer, which you would think they haven't, right? And the chip is performing well, right? So because Claude is working, Opus has gotten some really good feedback as well, so that means the chip is working, and that means that there's going to be more revenue for Marvell going forward. And the stock has been under so much pressure that and then with the optics as well, they the Celestial AI purchase as well. No, that was actually, yeah. So I think they're getting into the photonics market as well, and that also is going to play a huge role for them going forward. The other company that's another beneficiary from this trend is Astera Labs. Labs is it's a little bit of a high risk play. I'm not gonna lie to you, like it's not something that is like that's a potential stock for everybody, just because because it's a little overvalued if you were to ask me. But I do have a position in the stock because I just like the stock quite a bit because of what they offer. So what Astera Labs does is they sell parts for the racks. So if you know what scale up versus scale out is, so what's happening with the market right now is the racks are getting denser and denser. So like earlier you would have like one let's just open a whiteboard here. Earlier you would have okay, never mind. So earlier you would have like this one GPU, right, which has maybe like one rack which has like 4 GPUs. Now this has gone up to, I'm just like making numbers up, and now this has gone to 12 GPUs, and now like the Rubin GPUs are going up to like way more than this. So what's happening is like each rack is getting more and more GPUs, right? So these CPUs earlier, or these GPUs earlier, were kind of like spread out. So like you'll have 2 of these racks, and they need to communicate with each other, right? So like a workload has to work, like this whole data center has like all these multiple racks which have to communicate with each other. So through this they would have like a product called retimers, where they would just where the information would travel, and they would work together through that. The thing with retimer is it's a low cost product. So you say like you make only like $100 from, or $150 from like a retimer's sale for a rack. With what's happening now with these huge racks where the GPUs keep on going up, is like you have this architecture as well where they have to communicate with each other, and then you have to communicate with other racks as well. So what's happening is, with the complexity of these racks getting bigger and bigger and harder, the revenue per rack for Astera is going from $150 to $1,000. So the ASPs have gone up massively, or will go up massively, right? And then with average selling price going up, you also have more switches, because the number of GPUs in every data center is going to go up. So they're going to have an exponential increase in revenue here. So that is something that I think the market is obviously kind of aware of, right? But because just how well known this market is, but this, but still there's like there's still a lot of like growth potential here. Now the other thing that I would also mention is the technology that is the consortium between multiple other vendors besides NVIDIA who are selling chips. So AWS, AMD, all these other companies besides NVIDIA, what they're doing is they're creating this open standard called UA Link. So vendor neutrality connectivity for heterogeneous accelerators, high bandwidth, low latency memory semantics. So basically they're trying to create a consortium to fight NVIDIA's like crazy margins, so that their GPUs can kind of work together. And Astera is the leader in the UA Link, so that they're the leader of the consortium. They just want multiple GPUs to work together, so you don't have to be dependent on a Google TPU, or like just a Trainium chip, or like an AMD chip. So what they're doing is they're trying to make it work between multiple different types of GPUs, and trying to make them like more uniform. So what that does is that leads to this the switch, which is becoming more and more expensive, and this helps them going forward. Also, now you would say, okay, this is kind of anti-NVIDIA. At least that's what I thought, but apparently this is something that's common in the market. And if like Amazon initially was saying they're going to be completely reliant on their Trainium chips, but now they're saying they want to work with NVIDIA as well. So an Amazon Trainium rack could also work with an NVIDIA rack, and for that you need NVLink, which also they make. So they're so whoever benefits from the data center build out, whichever GPU wins, Astera Labs wins. I have a 2x ETF Astera Lab position. I'm finally in the green on that one. I built that position actually close to $140-$150. I was actually surprised when the stock dropped when Nvidia announced, when Amazon announced on their last call that NVLink is going to be adopted. I actually built a position somewhere over here, so yeah, it's kind of flat, nothing crazy. But the ETF, I think it's called LABX, is the one that's the 2x ETF. So yeah, this one looks good to me as well for now. I think we'll have a material re-rating on this one as well. I might be wrong. And again, I'm not a chip stock investor. I'm not an expert at this. This is outside my circle of competence. But sometimes the things are so obvious that you just have to take the trade, right? So, and then also I should mention this. They have Amazon has a deal with Astera Labs where Astera Labs, if Amazon buys, like, has a total revenue of $650 million given to Astera Labs, they would have some warrants for 1.5 million shares that would unlock. And then I think this deal was amended in 2023 to add an additional 830k shares. And to put it into context, Astera Labs' total revenue last year was, I think, $230 million. So that tells you what kind of potential we have with Astera Labs and Amazon, because Amazon, would need, if our thesis is correct, Amazon would need more chips. That would mean they would need more switches from Astera Labs, which could lead to more revenue going forward. And the margins on their products is also very strong right now. So whoever wins the race, the GPU race, Astera Labs should benefit from it. And that was my thesis. I know it's a little overvalued, but this is a momentum stock, right? And I think the AI narrative at some point this year will come back. Some of these stocks are getting hammered, and so that's something that's also there. And then the other thing that I really like about this company is the CXL memory controllers. So what that does is, if everybody follows the market, they kind of know the memory thesis. I'm actually trying to find a hidden memory stock. I'm looking into it. I think I have a potential winner in the market that is only starting to get traction. So we will hopefully cover that. I need to look into it a little bit more, but I will definitely cover that soon. So the CXL memory controllers, what that does is it kind of like we talked about the racks, right? So what that does is that uses the memory and tries to optimize the memory between these two racks. So these controllers or switches will try to optimize. So if there's multiple GPU, multiple racks, right? The Leo switches will try to use whatever memory. So say the memory here is 98%. This is at least how I understand it. I might be wrong, but the memory used here is 98%. Here is 87%, say, and here we have about 70%. So what the switches will do is they'll try to optimize the memory so that these the memory is maxed across these GPUs. So what that does is that reduces your memory cost, because then this one the memory cost over the memory that's available here can be used here as well as here. So that optimizes the cost, and that's, with memory being so expensive, these things become very important. So that's the other thing which is something that is getting some traction finally. So Yeah, so that's what I would say for that. And I think this company is going to re-rate materially higher as well, including Amazon as well as Marvell. So if you're interested in this market, that's how I play it. If you're super risk averse, I would just stick with Amazon. If you're someone who is willing to take risks, you would just increase the allocation for Marvell and ALAB based on those factors. So that was Marvell and ALAB. So next I'm going to talk about Rezolve. So I have exited my position. I had shared that I had longed the stock on January 13th, on Monday. I think it was Monday or Tuesday. I have an app that I use for tracking earnings and all of the conference calls and stuff that happened for a specific company. And Rezolve actually popped up on my screen when I was looking up a separate company, and they were actually like the guide that they had announced on that call was like massive. They said that their consensus was about $170 million, and they're going up to $350 million. So not every day you see a company just doubling guidance, right? So I was thinking that the stock should be 30-40% higher. So I just created a very started a very small speculative position in the stock. The chart still looks nice, but I created a very I started a very small speculative position in the stock on that day. But I decided to exit it actually, because a friend of mine reached out and said that they have a short report out. So I was like, these days the short reports are very almost manipulative to put the stock down. But then I looked at the short report and I was like, oh, this is not good. So I decided to actually close my position. I had longed it around 420, 421, and I sold around 470 yesterday. So or day before yesterday. So yeah, so I was actually very lucky with this. This could have gone really bad. My reason for going long was basically that I thought that this market is going to give a lot of credit to this huge guidance raise, because not every day you see where a company just raises guidance by 2x. So I was thinking the stock's probably going to be up 40-50%. I can make some money out of this company and basically get out, right? But that's not how it happened, and the stock went down I think 14-15% that day. But then I had enough conviction at that time, because I didn't know about this short report. I was like, this is going to be fine. I just didn't get around to looking at the what do you call it, the fundamentals and stuff like that. But I was like, the short report is probably whatever. This guide is crazy, and I've been looking at a player in the Agentic AI space as well. So that's why I was kind of interested in this one. But then when I read about it, I'm like, oh no, this is actually quite damning. So I decided to quit my position, because I was like, this is not something that I want to be involved with. Basically, the short allegations were that the CEO of the company for Rezolve has a previous venture called POVA, which went up to $2.7 billion in valuation, and then it went bust. And there's a lot of similarities. They were just lying about a lot of things. So what Rezolve does right now is they say you go on a website, say you go on let's just think about something. You say you go on a website like Abercrombie and Fitch, and you search up, I want to look for a black hoodie with silver lining or something. Then Rezolve's AI, which is integrated with the Abercrombie's website, will pull you something, and then you can just shop it, and then that's great. It's great for the companies, because they can have a higher conversion and everything else. So that sounds pretty interesting. But then the short report was just saying that this is just a ChatGPT agent that is just masked as a something that's proprietary and very similar to what they were doing at POVA. And then being an accountant myself, I generally look for what's going on with with the auditor, and the auditor was a very small company out of England. So that was another red flag. I was like, why do you not have a big four company? And also specifically when you have had allegations of saying that your executive team is not good enough, or you're spending taxpayer not taxpayer money, but investor money on strippers and champagnes and all these things, and you already eventually went bankrupt. It's hard for a company like that to gain investor confidence. For this, I wanted to cover this one concept. I know this video is getting a little longer, but I think this is something that might help you guys going forward. So I'm sure you've seen this meme, right? But this meme is actually very accurate. So what happens with this meme? It's basically saying is what it's saying is there's this left curve people who don't know much about the market as a whole, but they see like stocks only go up, and I've my buddy told me this, or like, this seems like a very good idea, so it should generally do well, and it does end up doing well, and these guys end up making money. This is where you don't want to be. These are, if you want 12, 13, 14% returns every year, great. You can be a mid-curve person. So, you'll probably still do well, but a lot of the mid-curve people, like, especially in the market right now, don't make too much money, right? So then there's the right curve thesis people who have a lot of understanding as to what's going on, and they understand how these people are going to think, and they also understand how these people are going to think. So they make their decisions based on this. So if you want to find multi-baggers, you want to find a stock that satisfies all three of these people. I guess these people are the ones who are going to look at it and say, okay, well, does this stock, benefit the mid curves? Okay, check. Is this a stock that the left curve people are going to think about? Okay, check. If you have these two checks, you're probably going to have a multi-bagger. Reason being that the number of investors who that stock can appeal to goes up massively. So for me, like, that company was Robinhood. In March, I've been on record. I can share again my screenshots if you want to. That was one of my biggest trades last year. I went long back in August 2024 at $16, and my whole thesis was, when I saw the quarter that they had, because if crypto was going up that quarter, I was like, man, they're going to benefit, right? And it was basically, market goes up, people share screenshots on X, more people see it, they want to share more screenshots. The stock was trading it was very cheap at that time. I think the best quarter, if you were to analyze it, they were trading at like, I think like 13 or 14 times earnings at that time. So that was like, okay, the mid curve thesis is going to be happy. The left curve who's trading stocks on Robinhood is going to be like, oh, I should probably buy Robinhood, right? So that was the thesis there. Valuation looked good. Company was good. UI was good. CEO was good. Everything checks off. More check marks, the more you have the likelihood of finding a multi-bagger. So that's what I wanted to tell you. Like, if you want to speculate, right, with thematic plays and everything else, you have to think like these people, or you almost have to think like these people. What are they going to do? Okay, like robotic stocks. Which stock has robotics in its name? Oh, there we go. Great, right? Like, so ideally you want to be somewhere over here, because that's probably the safest zone to be in, where you're like, okay. So initially, like, when I was starting to trade thematic, like couple of years ago, what I was doing was I was trying to think like these people. I was just build a basket of robotic stocks. Okay, let's buy Rich Tech Robotics, let's buy Kraken Robotics, and things like that, right? And you buy like a bucket of like 10 different stocks. That approach works for a little while, and then the correction happens, and you see these really bad ones going down massively, and you end up losing a lot of money. So what I learned from that experience was you actually only need maybe one or two, the ones which actually satisfy these people as well. So if Wall Street, like if Wall Street is trying to play a thematic, right, they're going to look for companies that actually have decent fundamentals. And that's a safer option as well. Rich Tech Robotics could do a 3x, but Kraken Robotics has also done really well, right? Why? Because their financials were good. Like, it's obviously overvalued at this point, but that was the better way to play a thematic. If you want to play a thematic, you also want to make sure that the fundamentals of that stock are good. And you can actually like stick with one or two really strong fundamental ones. Is their cash position good? Do they have enough liquidity? Do they have to dilute? Is the TAM good? Has the stock been listed for a long time? If it hasn't been listed for a long time, do you trust the management? Check these. If all these things check out, most likely it'll do well if the thematic is hot. So that's how I would trade thematics going forward. Just just some food for thought there. So let's take this away from here. And the next talk, this is getting a little longer, so I'm going to try to finish this soon. The next talk that I'm going to talk about is JSDA. So JSDA reported preliminary results on I think Thursday was. I was planning to share a detailed tweet on the weekend, but they already came out with their thing. So this is a Discord that I'm in. I've kind of shared my modeling around the stock. I'd said the company $8 million guidance seems quite low, and they're probably going to come in at like $10 to $11 million. The guide is for 11 point something, so it's a little it's 11.3 million. They're saying up to 12 million here, which is a little weird, but yeah, that was basically, it worked out well here. It was a little higher than what I would have expected, and it did well. I've sold about 20% of my position already. The stock went up, I think, 100% this week. Yeah, I think the stock was up like was up quite a bit this week actually. It's up like 65%, 70%. I sold 20% of my position. This company has had a very tainted past as well, but the fallout collaboration that they did this time around, they didn't have Costco last time around. So the first time they had Costco, so I was kind of like trying to figure out, okay, well, what would that impact, and try to find out what was the impact of this specific collaboration last time, and how would you play that this time around. And yeah, that was my analysis on this. Kind of worked out pretty well in hindsight, right? And I would want to give a shout out to my friend King Kang on X. He actually sent me a picture of how the what do you call it? How the bottles were stacked up in Costco. So that way we were kind of like, we were able to estimate how many cases they were selling at Costco, and that's how we estimated the revenue basically. So that kind of worked out well for us. Very happy how this played out, and still have 80% of my position. At the end of the day, this stock is going to re-rate higher if they're able to get another collaboration, because if they're doing $12 million from one collaboration, I believe that $12 million will make them profitable if they had the same quarter next year, because they're cutting down on operating costs. So if they're able to do one or two more collaborations, which the management teased in the last quarter, if they're able to do that, then this company becomes profitable, and you can also potentially get like a 2-3x from here. Yeah, it's pretty good. And I like so this was a clue that I picked up from I guess when I was estimating revenue. So the other thing that makes me think the revenue number is possibly much higher is that this has a liquidity crisis, and the PE firm, which gave them the revolving facility, increased the line from $5 million to $10 million. So this was very interesting and very telling that, the PE firm, which actually has a line of credit going with them, they would just double the line of credit, right? So they must have had some visibility into it. So that's why I was saying this is going to be a good quarter, and worked out good. So yeah, another lucky one with that. The last one I want to talk about, and then we talked about a couple of other stocks which I really like, is VFC. So VFC is VF Corporation. They own a bunch of different brands. The primary brands that they own being Vans, Timberland, and North Face. So Darryl Bracken talked about the company on the latest conference on ICR. So he talked about that Vans is still kind of improving. So I'm not sure if when that happens, but we're seeing early signs of those numbers starting to look better. So Caleres is a company that's that sells their product. They mentioned that Timberland was one of the top growth brands alongside heavy hitters like Adidas and New Balance. And then there's this company in LATAM, Azus 2154. They are a distributor for Vans, and they were saying that they are going to stop the reduction of Vans in 2026, and they're seeing like some a renaissance in the skatewear section. So that would lead to Vans hopefully getting like a little bit more, what do you call it, like distribution in different distributors, and then also like the continuous decline in Vans will probably stop, and then we'll maybe hopefully have a little bit of inflection there. And like, so the way the way turnarounds work is, once you have one or two really good quarters, the initial quarters are heavily what do you call it, they're heavily they are very heavily, I'm just blanking out, it's like 2 a.m. 3 a.m. in the morning. So they're heavily like they're basically highly re-rated by the market. So what happens is, like, if Timberlands is growing well, we know North Face is growing well, we know, right? So if Vans is doing well as well, finally, eventually, like, then what that does is that will lead to a re-rating of the stock, because the Vans is the biggest weight on the stock. If Vans starts inflecting, the stock would go up higher. So a lot of people are not seeing this yet, but in the turnarounds, the most amount of money is made before the turnaround actually happens. So if I was an investor, I would be rather long Vans than Nike right now, because Vans is seeing the inflection, and the other brands like Ultra and like what do you call it, Timberland and North Face are actually doing really well as well, and they want to increase the distribution for those two brands as well. So those will continue to do well along with Ultra. And as soon as Vans, which is also showing, this is StockX, which is a brand which is a company that you can go buy sneakers on, and they were also saying that Vans ended the 2025 with even stronger momentum. Averaging prices jumped 42%, while average price premium surged. This is due to like limited drops that Vans is getting into, but there is early green shoots of success here. So if actually Vans ends up inflecting, you'll see things will start to change for them. They launched purses and stuff like that, which also have done relatively well. So I think this is a play that will do relatively well. So the two stocks that are going to be technical trades, which are also fundamental trades actually this time around, because I'm going to change my philosophy there too. I'm going to try to share good technical setups with good charts. So this is a chart which looks beautiful at the moment, and I think is going to likely print a god candle, as they call it, on earnings. So what is Viavi? Viavi Solutions is a tough company to understand. I'm going to try to distill it down a little bit for you guys. So basically, this is the Gemini graphic that I was able to create through them. So what Viavi does is, Viavi is basically a testing company. What they do is they test the data center. So what happens is, if like, so right over here, if you see, downtime in a data center is very costly, right? Like downtime, I think it's like they were saying there's one sort of a downtime every 3 hours. When Meta was doing their training run, I think they were saying that each hour is worth $300,000. So like each hour downtime is worth $300,000 to $500,000. You cannot have downtime, and if you're having downtime like if you're having 1 hour or 3 hours of downtime every day, right? That means you're gonna be like 1.5, like $2 million in the like you're just basically throwing money away. So what Viavi does is, Viavi earlier used to be the cable expert. So if there was a speck of dust on like a fiber cable, right, they would just test it and make sure that that was taken care of and that was fixed and things like that. So just from the sounds that's not a very high margin business, right? You can make money on it, but it won't be high margin. But then they acquired this company called Spirent. This was a very this was like a lucky break for them, because another company was trying, which is their main competitor, the name is escaping me right now, was trying to acquire Spirent. But what happened was the DOJ basically said that this won't be allowed, and they have to divest the speed and software business to someone else, a competitor. So Viavi was in the place there. They had bid, I think, $1.2 billion for this company, but the competitor came in and bid like $1.5 billion. But DOJ said you can't get the entire company. You have to divest some of the assets of the company, and they ended up divesting the high margin business, which actually worked out very, like, it was just like a serendipitous thing for Viavi. So they got the Spirent's like growing business, and they are now they're now making like a lot of money, and Spirent is supposed to add $200 million to the top line, and I think it's probably going to be higher, because initially they were saying 188 million, now it's up to 200 million. It's probably going to go higher, because as these data centers get bigger, there's more and more need for these services, and I think like this will help them like increase revenue further. And this is a interesting play on the market, and I think they're priced like 60 to 70% cheaper than their duopolistic competitor. So there's a high room for growth here. The biggest reason for why the stock hasn't re-rated higher is because of the debt. Like I think they have like 6x EV to I think their debt is like 6 times EBITDA, so it's a little expensive, but they're already making steps to get that dialed down. So this is an interesting play on the data center market beyond the GPU and everything. It's like a servicing company, but a servicing company that's super scalable. So this company probably is continuing to do well here, and I think given that it's quite cheap as compared to its competitors, it'll probably continue to run. They have a cash cow legacy business as well, which is related to banknotes and stuff, which I'm not going to get into. There's no point to that, but that business makes money as well for them. So I think this will be they'll probably have a big candle on earnings. Last time it went up 30%. I won't be surprised if it does another 20% on earnings or something like that. So, and this high tide flag looks very nice. High consolidation. This probably like kind of goes sideways, maybe like drops down a little bit to $17, and then just prints a big candle on earnings is my guess. The next one I'm going to talk about is Centrus Energy. This is a play on the uranium market. They are the only listed player that enriches uranium, and they got a big deal from the government of United States. They have to build a facility for $900 million. They probably won't make too much money on it, but it kind of tells you that this is a play that is going to benefit from the market as a whole, and energy constraints continue to go up. I have a couple of the plays in the energy market. One was Bloom Energy I wanted to talk about, but has already gone up significantly. There's another small cap OTC stock that I am still researching, which I really like. I will share it once I'm able to build a thesis around it. But yeah, like this is another one where that I talked about, like mid-level analysts and smart money, so-called smart money, is thus one of the only ways for them to play this market, and this company is profitable. This company is also like one of the only few ways to play the uranium enrichment market, and they basically are a monopoly in that sense. There's two other companies that got the contract to the government of United States, but the thing is those companies are not investable, so that kind of reduces their attractiveness, I guess. So yeah, this is the only way to play it for a public company perspective. So thanks, guys. I have to go. Actually, I have to catch a flight, and this has gone a little longer than I had expected. So sorry about that, but I hope you enjoyed it. And if you're still here, I really appreciate you listening through this whole thing. And please share with a friend if you think these things are valuable. Again, I don't plan to charge anything ever for anything I do. This is just for fun, and I hopefully can add a little bit to your investing forte. So yeah, thanks for watching, guys, and we will see you in the next one. Take care. Bye.